Macron resignation rumors denied after French bonds tumble. Rumors that President Emmanuel Macron was preparing to resign were swiftly denied after speculation over his future spurred a sharp sell-off in French government bonds. Macron hasn't been discussing a potential resignation, a person close to the French president said on Tuesday after a radio station reported about the possibility. He is set to hold a press conference on Wednesday to set out his campaign, the person also added. Now, the prospect of a prolonged period of political uncertainty is rattling investor confidence in the economy and nation's political outlook, with the unease starting to spread to other European markets. The yield on 10-year French bonds, known as OATs, jumped as much as 10 basis points Tuesday and widened the spread over equivalent German bonds to the highest level since March 2020 on a closing basis. Now, Italian security is considered among the region's riskiest given the government's debt pile was swept up in the route for a second day, with the spread over bonds jumping to 150 basis points. Macron called the election to curb the political rise of Marine Le Pen, whose National Rally Party won widespread support in the EU election over the weekend. The first round of the vote on June 30 risks becoming the ultimate showdown over Macron's trademarked economic policies, which had largely reassured investors and businesses since he took office in 2017. France's snap election shakes investors' confidence in the economy. Now, in particular, plugging holes in the budget will become even more challenging if he loses control over parliament and the government. S&P 500 Global Rating last month downgraded the nation's credit score, saying the deficit will remain above 3% of gross domestic product through 2027. France's fiscal watchdog says the government's deficit strategy lacks coherency and credibility. Macron's government was already struggling with fiscal consolidation, and the concern is now that any national rally government will follow Trump's approach to fiscal consolidation that is trying to grow its way out of the problem, said Chris Turner, ING's global head of market. He flagged the European Commission will likely launch a successive deficit procedure against France on June 19, an action designed to force member states to get poor public finances in line with EU rules. While that risk has been well flagged and applies to a host of other countries, it will keep the spotlight on France's fiscal challenges just weeks ahead of the vote. A poll published Monday on first-round vote intentions puts the nation's national rally at 34%, with Macron's group trailing at 19%. We had been short France from the beginning of the year due to fiscal deterioration, but we also have been surprised with Macron's strategy, said Casper Hans, senior portfolio manager at RBC Blue Bay Asset Management. A new election is a higher risk strategy in times of heightened geopolitical risk in the first place. Political chaos. Macron is now headed into a very high-stakes group of 7 meetings, having unleashed political chaos back home. He is joining a series of leaders who are also struggling in facing elections. But his future, and indeed how he can put the genie back in the bottle, will be a dominant topic in Puglia, Italy this weekend, both among his colleagues and by the media. It's caught not only his country off guard, but also his close partners in the European Union. The size of the moves are unusual for French bonds, among the most liquid in the European market and traditionally viewed as a substitute for bonds, the region's safest assets. The volatility shows a change of risk perception on OAT, said Societe Generale SA strategist Adam Corpiel. French equity benchmark CAC 40 was down 0.9% on Tuesday, led by banking stocks including BNP Paribas, Societe Generale, and Crédit Agricole. The index is down 2.2% so far this week. The question we're asking ourselves is at what level of spread do domestics come to buy, said Théophile Legrand, a rate strategist at Natixis SA. Previously, he had expected French investors to step in when the spread reached 60 basis points, but now expects them to appear when the gap widens to 70 basis points.